All right. Hello, everyone. Tim Davis coming to you guys with a market update and market review. Been a little busy here, but better, no other time better than now to show you guys what the markets are showing us. Um, I'm going to start off by taking a look at the SPXA 200R for you guys who've been following me for a while. You know, I use this to track overall market sentiment, and I'm going to point out a few things here before we take a look at the major indices. What I'd like to point out here is that all right, so this is a daily chart of the SPXA 200R, and what I want to point out here is that this tool it's been pretty good with giving us overall market sentiment and when we can see shifts and changes. If we look here, I got some white dash lines here, which have been acting as levels of support and resistance. What I want to point out here is that every time that the percentages have got around that 50% level, and right now we trading just below 50% over the past, I say several months, maybe over the past year. So every time we got around that 50% level since December of last year, close to it. Around the 50% level, we see some kind of a bounce in overall sentiment. Back here around April, between March and April, we got just below that 50% level, around about 40%. And then we see some kind of a bounce right here around the end of May, beginning of June, got just below that 50% level, seeing some kind of bounce. And where we are now, look like we have a possible double bottom here. And we're just below that 50% level again at 0.47. We could be in store for some kind of a bounce. If you look at the CCI, looks like it's starting to reverse, like it's starting to have a turn up here. So we could be in store for a sentiment change temporarily. And I just say temporarily because we don't know how long that will last. Again, every time we reach just around, just below 80%, we've seen a decline. So could we be in store for a sizable bounce here? That is possible. We got to wait and see how that pans out. Now, with that said, let's take a look at the overall markets. I want to take a look at the futures right now because it is now Monday morning, September 11th, 2023. Time is now about 3:50 a.m. And the futures are starting to trying to show signs of life. And what I mean by that, again, look at the daily chart here. Uh, Take a look at the 20-period moving average, which is right here, this blue line here. See, price action has been in a downturn since that's the end of July. And we managed to fall below this 20-period moving average right here, back around the beginning of August. Pull back, didn't quite all the way go down here to this level of resistance or level of support, I'm sorry. Got a slight bounce back up to this 20-period moving average, and we've pretty much been riding this 20-period moving average downward. And look what happened. Look what's happening now. There's a gap up above this 20-period moving average. Now we had to see how well this fares. Do we stay above this 20-period moving average and use this 20-period now as a level of support and continue to find a way to move higher? That's a possibility. If you look at the full stochastics, looks like the oscillators are starting to turn up there. As percentage, oscillators are starting to turn up. CCI it is turning up, and you see overall CCI has been in a upward momentum since middle of August. Overall movement has been moving higher. So could this coincide with what we just saw in the SPXA 200R? That is starting to show that we could be in signs of a reversal higher. That is a possibility. So keep that in mind, even though we keep running our head into some strong resistance every time you do find a way to run higher. We are in this range. It's in this range. So we are in this range. Let's see how things transpire as we go through the day. Right now, this time around 3:50 a.m. in the morning on a Monday morning, 9/11, futures is showing some positivity within the overall markets. And the overall market sentiment on Friday showed that looks like price action wants to looks like we may be at a turning point. It's possible maybe at a temporary turning point. So keep that in mind as you go throughout the trading day, rest of the day, and the rest of this week. Do we hold this gap? So that's the big question. Is a gap up? And one thing you got to be mindful about gaps. Not a lot of times when you see these gaps, 9 times out of 10, gaps find a way to backfill. So let's see what happens here as we go throughout this trading day. But then we gap back up above the 20 per moving average after we've been, hovering below it since the end of September. I'm sorry, since the end of August. Gap up, there's a gap. So let's see if that gap fills with price action pulling back towards that gap. And then if it does pull back towards the gap, does it hold at that 20 per moving average and bounce? That's what we've been looking for as we go through the trading day today. All right. That is the Dow Jones futures on the daily. Let's take a look at the S&P minis on the daily. Same thing. You'll see the gap up above the 20 per moving average. At the gap above the 20 per moving average with oscillators in full stochastics, percentage, and CCI all turning upward on a daily chart. We take a look at the NASDAQ futures. Again, same scenario. The NASDAQ futures didn't quite drop below its 20 per moving average. Kind of like rested there for several days or over a week or so, and it looks like we're starting to bounce with that gap up. And same thing, the oscillators are starting to turn up in the Williams percentage, full stochastic, and CCI. And look at the Russell E-minis. Same thing. Only difference here is that the Russell is still hovering right at its 20 per moving average. A slight gap up, but we're back up to the 20 per moving average and has not really had a sustainable move above it just yet. Let's take a look at crude real quick. Crude oil. Because it too has been showing some resilience here lately. And one thing I'll point out on crude, it's how we got this pushback above its 20 per moving average, and now it's like we are at a standstill. So do we pull back towards the 20 per moving average, or do we stay here, wait for the 20 per moving average to come up and then continue to go higher? That is, it's hard to see what happens there. But look at the CCI. It hit a high point back in, the oscillators hit a high point back at the beginning of September, and it's starting to come down. So, does price action follow? We have to wait and see. But we got a pivot point here that shows the negative divergence line, negative line above the positive line, which is the yellow line above the green line, and the oscillators. And it's like we could be attempting a move lower here. And if you look at the oscillators in the Williams percentage, like we are up in the overbought territory, and we're just sitting here. Same way in the full stochastic overbought territory, just sitting here. So overall, I still think that there's more movement for crude oil to go higher. But in the near term, we could see some type of pullback possibly. Because if we switch to a weekly chart, we'll see like the momentum is higher. We're back above levels of resistance. So we were having some time getting above this $82 level a while ago. So see how we struggle to get above this $82 level, which is where I marked a level of resistance at one point. And it looks like we finally broken above that level. So could 82 be a level of support? That could be the level of support. So could we go back down to test that 82? That is a possibility. So that is a possibility. Keep that in mind as we watch crude over the next couple months. We could see crude pull back here and test that support before we go higher. That is a possibility. All right, folks, that's all I have for you guys for right now. Just wanted to give you guys just a slight update. And yeah, overall sentiment, again, SPXA 200R. Let's take a look at that one more time before we roll out here. And if you look at the weekly chart, it looks quite dire because we see that the SPXA 200R, it fell dramatically below its 20 per moving average on the weekly chart. The oscillators and the full stochastic swing percentage and CCI all turning down. So, and we're heading into some oversold territory. So, and we're right at a level of support again. So could we see a slight turn up? That's true. We could see a slight turn up, maybe even a positive week this week. And with this big red candle that we got last week on the SPXA 200R on the weekly chart, back down to level support, could we see this turn up and get some traders excited? That's possible. But we have to pay close attention because we are still, even on the weekly chart, we are below this 20 per moving average. So we could see the sentiment go back up. Could see sentiment even get up to 55. Right now we're at 47. Could see sentiment get to 55, and then maybe do a fake out movement and roll back over. So that's something we need to pay close attention to this week. We could see some market shift positivity in the near term this week, and we have to wait and see how it pans out. All right, folks, that's all I have for you guys. Until the next video, Tim Davis here signing off. Enjoy your day and enjoy the rest of your week, folks.